We are live. It's Thursday morning. It's not that much happening in the markets. It's not that much
Huh.
news. Well, I don't think it's that much. And we are sitting down with the lovely Ed Matz, who seems to be in a
Lovely.
much better mood. So I guess his Reuters is not acting out today. And
I wouldn't
uh,
go that far, and I certainly wouldn't go as far to describe me as lovely, and I certainly wouldn't say there's nothing happening in this market, sorry, but
no, but
one person's inch is another man's mile.
oh, your name is Harry there for a moment. See,
Harry.
I was bragging about being prepared today, and everything went wrong. So
Well, that's because you introduced me into the equation. I'm there to challenge in every sense.
yes, you have a long lineup today. I'm
Good.
impressed.
Who, me or you?
You. We have our new Pinterest page. Should I show it off?
Yeah, what struck me is really odd because it struck me as two or three things. The whole point of doing this is why I'm trying to help you do this is to find out is to address key traders issues. What is key to a trader? What is key to going on? So no disrespect, Sverre, when you start the show by saying there's nothing going on and you've seen the euro rally 100 points this morning or
Yeah.
from overnight, etc., then it starts. Yeah, that's what people want to know. They want to know. They want to know several things. They want to know how can they make money right here and now. They want to know how they can make money tomorrow, and they want to make sure that they're here in 3 months and they haven't lost a bundle, so they can carry on towards their dream, their aspiration of being a professional trader, or making a mint, or buying that yacht. And that's what today's about. I'll try and pick up on the themes, some of the things we talked about before. What I want to do is talk about buying that yacht, really, or anyone's equivalent of a yacht. If you're trying to buy, I actually did this. I bought my first wife's, to explain yesterday, my late wife's engagement ring through a trading bonus, and I was looking forward to getting that so I could get married. But there you go. That's another story. But it's essentially what today is about is greed and why it's a cliche. We talk so much of the time about cliches. There are so many cliches which apply some of the time, but not all of the time. So be warned. But today's cliche is about greed and how greed is there. Obviously bad. The word greed in itself has bad connotations. Too much of anything is a bad thing. But greed or profit is probably a better word of talking about it. And another way to understand it truly is essential from a society's or economy's point of view, but it's also essential to a trader, but not too much profit. So let's kick off. That's what I wanted to talk about. Is not only is greed, how it impacts, why it's necessary, but also why we need to be careful of greed from a trading perspective. And there's no better way to start than scratch. So kick off.
Yeah, it's here. I don't want to play the audio because we're gonna get shut down immediately. And this is the famous rat figure from from Ice Age. I guess you saw this with your son, right?
Well, several of my children, all my entire family likes
Yeah,
watching things like this.
but
And he's
he's a
not a
great.
rat. Is he near a squirrel?
Uh, yeah, I think it's some prehistoric something.
Very
And he
squirrel.
loves acorns.
Yeah, and he's collecting. He's trying to collect every acorn there is, and his focus is on acorns and getting more and more acorns. Um, this is a classic. This is a classic ferry as well. It's brilliant. Now he's trying to get everyone. They're all. He's trying to collect all of them, and then he realizes that you can't get every single acorn there is.
And that's what a lot of traders do. I would I would take it.
Well, it's not just traders; it's everyone. Yeah. It's interesting looking at that thing a couple of days ago about Sir John Templeton, how he was very focused, very ambitious, had clear goals he wanted to achieve in some really interesting ways. And yet he didn't want to, he wasn't greedy, he wasn't extravagant. He realized the good things in life don't necessarily always come with money. And therefore, you need to set your goals and then try and achieve them and sometimes not overachieve them, like this guy. It's because he's clearly flying. Okay, let's move on. So, kind of today's today. Can you skip to number 4? number 4 I put up. Today's
Yes.
show is about greed, but it's particularly about if Sverre can get this newspaper headline, which I think sums it up.
I love that headline. I actually kind of like the New York Post. A lot of people don't, but they do just cut to the chase.
Not so fast, you greedy. I'm not going to say that word. Okay, right. So, what the nature of greed? I want to go top down. It's interesting because it's the same with sentiment generally and emotion. Sentiment is a collection of the aggregate of emotions in the market that drives people and what they're thinking. The same with greed. It's quite important to recognize greed in the concept, in the wider concept, and profit in the wider concept is different to profit and the need for profit and the dangers of greed from an individual trader's point of view. So the archetypal, the most famous, the best clip, if you like, or example of someone talking about greed is Gordon Gekko in Wall Street. So can we show that?
Sure can.
I'm going to skip through a few video clips here.
There you go. Do you want me to play it?
Please. Yeah.
Greed works. Greed clarifies, cuts through, and captures the essence of the evolutionary spirit. Greed in all of its forms. Greed for life, for money, for love, knowledge, has marked the upward surge of mankind, and greed, you mark my words, will not only save Teldar Paper, but that other malfunctioning corporation called the USA. Thank you very much.
Yeah.
Great is good.
Well, ambition, yeah, the desire, hunger. I mean, I started talking about desire yesterday. Desire to achieve certain goals. The question is are the goals, is money the goal in itself? And from a trading point of view, clearly the whole point of trading is to, well, one presumes, although that's a good point, begs lots of other questions, is to make money.
Yeah.
And therefore, focusing on trying to make money, one would presume is the right thing to do in trading. No, you should always trade a market and not your P&L. You should trade what you're seeing, what your system or your approach is telling you, and not the desire to make money. And I think that's, in anyone's experience, you can soon come a cropper if your pursuit is for the dollar and the dollar only in everything you do. You show the third clip, the most more recent one, is exemplified by Jordan Belfort.
My name is Jordan Belfort. I started my own firm at an abandoned auto body shop.
I love my country, I love Jesus Christ, and I love making people rich.
Hello? I don't want to get a bad reputation.
He just tried to bribe a federal officer.
Trying to make a name for ourselves.
Go work for Wall Street.
We don't work for you, man.
Yeah, my money came to your dues. Okay, technically you do.
Yeah, I mean, one of the appeals, if there is an appeal, I haven't yet to finish it actually. The appeals of Wolf on Wall Street is the excesses. And the excesses, that's how the guy made so much money, because he's that type of character who's given the opportunity. He could pursue the American dollar, the American dream, if you want to put it that way. And soon comes a cropper. But as I said, I haven't seen the end of that film because I was watching it with my son, one of my older sons, and my wife came home, and I thought probably best not to try and watch it with her. Don't ask me why, but that's the truth of it. And that's a classic, kind of sums up the not so fast, you greedy bastards, because if your pursuit is for profit only and trying to squeeze everything you can out, you'll miss a number of things. Often you'll step out of legality in that instance, but also you'll step out of your trading parameters and your trading setup, which is dangerous.
Do you see a lot of greed? I mean, you worked in the bank before, and you saw a lot of other people dealing. Have you seen greed kill? I mean, I've seen it, but
Greed?
yeah.
Yeah, well, obviously. I mean, it's a necessary. I guess what I'm going to drive to today is there's a fine line, there's a balance between seeking profit, being ambitious, being determined, working hard, because that's the goal you want to achieve, and then the pursuit of money in itself, pursuit of profit in itself, changes your actual, what you set up as a very well thought out structure and plan to achieve that, because you start to get you know, you start to see dollar signs in your eyes, or you start to change everything because for whatever reason greed has taken over. You start to get overconfident, and if you look at it in a wider sense in society, then it's part of that driving force of profit. And sometimes, you know, you can look at it collectively because there are people out there who've just a single-minded focus to make money. Because they exist, they help everyone do well. If you put up a point about, I mean, Milton Friedman speaks. You can skip to Milton Friedman and come back to George Soros. Some of these, Milton Friedman was most famously associated with monetarism.
The maldistribution of wealth, the desperate plight of millions of people in underdeveloped countries, when you see so few haves and so many have-nots, when you see the greed and the concentration of power within, did you ever have a moment of doubt about capitalism and whether greed's a good idea to run on?
Well, first of all, tell me, is there some society you know that doesn't run on greed? You think Russia doesn't run on greed? You think China doesn't run on greed? What is greed? Of course, none of us are greedy. It's only the other fellow who's greedy. The world runs on individuals pursuing their separate interests. The great achievements of civilization have not come from government bureaus. Einstein didn't construct his theory under order from a bureaucrat. Henry Ford didn't revolutionize the automobile industry that way. In the only cases in which the masses have escaped from the kind of grinding poverty you're talking about, the only cases in recorded history are where they have had capitalism and largely free trade. If you want to know where the masses are worst off, it's exactly in the kinds of societies that depart from that. So that the record of history is absolutely crystal clear that there is no alternative way so far discovered of improving the lot of the ordinary people that can hold a candle to the productive activities that are unleashed by a free enterprise system.
But it seems to reward not virtue as much as ability to manipulate the system.
And what does reward virtue? You think the communist commissar rewards virtue? You think a Hitler rewards virtue? You think, excuse me, if you'll pardon me, do you think American presidents reward virtue? Do they choose their appointees on the basis of the virtue of the people appointed or on the basis of their political clout? Is it really true that political self-interest is nobler somehow than economic self-interest? You know, I think you're taking a lot of things for granted. And just tell me where in the world you find these angels who are going to organize society for us. Well, I don't even trust you to do that.
That's a brilliant clip.
Yeah, I mean, he's very eloquent, actually. Milton Friedman. He's a very clever man. Came up with some very interesting ideas that form the basis of a number of things. Not least, in some ways, and I won't go into the whole concept of permanent income hypothesis, which is interestingly applied to trading. But that's possibly too deep and probably useful for another time. Let's go back to George Soros's point, because what I want to do is take establish very quickly the clear need for why greed works in a collective sense, and why we need profit, the profit motive. And someone like George Soros, quite clearly, you know, we've kind of alluded to this before, how someone like George Soros has done very well, but he sees the need also to go and do other things, you know, his foundations and some of his theories. And he talks about how markets are designed to help people and meet their private needs. And it's not only essential, but it's a good thing as well, and we can underestimate that. But also, because of that pursuit of profit, and therefore the over pursuit of profit or the pursuit of greed, people become greedy, then we miss out. We forget, those people are less fortunate, we forget about the needs of other people, and therefore greed can be dangerous in that sense for a society. And if you know, it's kind of best described by psychologist Eric Fromm, who's the next one on the list.
Greed is a bottomless pit.
Yeah, it's because this is moving from, you know, like if you like society, because we focus on making money and improving the economy and doing well, people get left behind. But also because it becomes something in itself. It becomes an ambition to make more and more money. And you leave the quote up?
Yep.
And the problem is we become so focused on that we actually forget the structure of how we work. From a society's point of view, it would be the the poor and the needy and disabled. And from an economy's point of view, it's some of those assets, the longer term assets they need investment in. We become a consumer society. It's some of those, it's education in the third world. It's some of those issues that will help our economy, but we're so focused on the short term and money and greed, we actually kind of become self-defeating, which is kind of a big point. But it's an underlying point to trading, and essentially that we become so focused on making money today and what's happening in the next hour, we may miss the opportunities for next week. We get so caught up on being, thinking the euro is going up now. We need to make money now, that we miss perspective. That in fact, what is this market doing? This market is doing nothing. It's going sideways, and yet we're arguing the toss and pursuing big trends that aren't there. So the problem with greed is it changes and alters our perspective from what is from reality. And I think this market at the moment is quite clearly a consolidation market.
Yeah.
And one of the problems is why people go into trading, and the types of people who go into trading do so not necessarily for the right reasons or the wrong reasons, but they go in because they want to achieve certain goals. You want to put up the Jesse Livermore picture? I love this, isn't it?
Beautiful.
It's
It's like your ring there.
Can you read it? Because I can't actually read
There
it
isn't a
out from
trader
here.
on Wall Street who has not lost money trying to make the market pay for an automobile or a bracelet or a motorboat or a painting. I think the resolve to induce the stock market to act as a fairy godmother is the busiest and most persistent.
So he's saying the pursuit of individual items, individual profit, is a danger in itself. And there's, I just had to put a picture of one of his yachts and his Evermore. Again, it's kind of easy, isn't it? It's easy to say, oh, you shouldn't,
Yeah, exactly.
pursue these objects, you shouldn't do it. But there's a couple points here, well, 3 points.
Yeah.
The first is that no, you should never go into a market, not knowing what the market is doing, or have a sense and saying, I need to make X amount of money in order to buy my wife's engagement or my fiance's engagement ring, because that's a recipe for disaster. If the opportunity isn't there, then it's not there. You start chasing. And the second point is how that can actually affect, your whole psyche and how you approach it. Do you want to throw up the quote by, is it
Loeb.
Loeb? Yeah, exactly.
Profits can be made safely only when the opportunity is available, and not just because they happen to be desired or needed.
Exactly. Someone asked me, and it's a bit unfair, I'm not going to mention the name, because it was a pretty sensible question yesterday, and this is what triggered the whole thing. We talked about sentiment, etc., and emotion, and one of the key sentiments and emotions in the market, drives the market, is greed. And someone asked me the question, can you make 10,000, can you make 50,000 out of 10,000? In other words, can you start with 10,000 trading and make 50,000? I can do that in minutes in the right market. I can lose the 10,000 probably even quicker. A 5-to-1 risk return multiple, done it many, many times. Done much, even better risk return multiples, and I've lost £10,000 many, many times, and on a few occasions, several times over within the same minute. So it is clearly possible, and that's what brings people in, is the idea of a quick buck. And trading can give you a quick buck, but if you want to be there in 3 months' time, you can't pursue a series of quick bucks. You have to look at the longer term and wait for the opportunities when they present themselves. Do you want to throw up, Idaho? I'm sure you wouldn't mind me advertising. A guy called Scott O'Neill has presented...
which one was that? Is that the...
No, go to William Morris.
Yeah, it's already on it.
William Morris, because...
The market is always there, and other opportunities for making profits will present themselves while the greedy trader is waiting to get the last eighth.
Exactly. Well, we've all done this. We've all been there looking for, have a game plan. I've got 3-to-1 risk return. And then it starts to get there. Let's say it's the euro today, and you start looking, it looks so big and strong. I'll start edging out some and not running. I'm starting to run it, whereas my original plan was to take some profit. And it's quite clear, often sticking to your trade plan is often in retrospect the best thing to do. The number of times something's happened that I've actually held onto my position beyond my target level only to lose probably the entire profit, in fact. It's one of the earliest lessons. One of the first trades I did was a monster good trade, and I let it come back all the way to my level because I was looking for like 50 points more. I lost, it was 700. I remember well, I made 750 points. I was up 750 pips and looking for another 50 pips, and I ended up taking the position back break even. Well, at least it was break even, yeah. So that was an early.
That's got to be painful, though. I don't think you were thinking at least it was break even at the time. And that's got to be the worst kind of pain as a trader you can feel. Like
Missed
giving
profit.
away. Yeah.
Missed profit.
It's got to be worse
missed opportunities actually are worse. I don't think they are. It's a bit like the cliche. It's about it's harder for a rich man to become poor than it is to be poor. And there are a lot of cliches that don't really adequately describe it. I think it's everyone wants to be in a position where they made 750, where they're up 750 pips.
Yeah.
So when you lose that, it kind of makes you feel sick, but rather than losing money. But anyway, that's beside the point. There's interestingly, the Sun. I think I quoted him the last couple of days or so. I mentioned him. A chap called O'Neill, William O'Neill, I think it is. When I go back, his son, in fact, now runs, is it Market Smith, I think? Here's a video, and he talks about the nature of greed from a trading perspective. He should pay us, because it has got an ad at the end, but there you go.
Greed is one of the more interesting emotions to study. People get tripped up in greed in many ways in the stock market. For instance, a lot of people plunge into the market because of greed. They think they've got it figured out and they're going to hit a home run right now on this stock, and they plow in, and then the market doesn't do what they thought it was going to do, and they get caught. The way we enter the market is key. We slowly dole money out. We make a purchase, and then we want to wait and see that that purchase is correct. So a good rule of thumb is make each decision prove to be correct before you make another one. This is a little safety mechanism to protect you from getting in too deep when you shouldn't be in that deep, or if the trend's going against you. See, if you plunge and you're in very deep, but you don't have much of a cushion established, it's very easy for you to get shaken out. I actually believe that an investor is probably better off if they take a smaller position in a stock that they can hold through the life of the move than try to plunge and take a much larger position, and at the first sign of weakness, bailing on it, then trying to buy it back and going back and forth. You're just a lot better off starting at your comfort level. In a climax run, you sell everything. This reminds me of the time I owned Qualcomm back in 1999, a fabulous leader. Stock was going up so fast, and I had a good position in it, and I call in, and they tell me that the stock is up 156 points, and I didn't want to sell it, but I knew that it was going through a climax top, which is a primary sell rule. The move is over, and the rule is when you're in a climax run, you sell everything you own. Well, I sold 2/3 because I just didn't want to part with all of it. And this is a mental trap that a lot of investors actually slip into, and they don't realize it. Consulting a Market Smith chart can help you follow rules and avoid emotional pitfalls like greed.
I don't know what the noise was in the background there, but anyway, very eloquent, very articulate.
It's
Looks
in
a
his
lot
video.
like David Cameron again, and therefore like Richard, Richard's the guy who does a lot of work very kindly in the background with Sverre.
Yeah. By the way, that music was his music.
Was it?
Yeah.
Oh, okay, because it was irritating the heck out of me. I thought your phone was ringing. I thought, oh,
My
come on,
phone?
Sverre.
No.
No, my apologies for giving you an exclamation mark or whatever.
No, it
Yeah.
was But it was
Okay.
great what he said. I loved it.
Okay, so kind of what the point I made is that greed and profit is necessary from a society's point of view, and that profit and greed is necessary, or profit is necessary from a trader's point of view, but greed is one of the worst enemies for a trader. And Scott O'Neill was describing some of the pitfalls, how you can end up waiting, and I gave you an example of how you can stay too long in a position. But what does that actually mean? And there's two ways of doing this. One is to say to yourself, well, how do I remove greed? First is to identify why it's there. Why do people get greedy in trading? Well, we talked about wanting to buy the yacht or the girlfriend, the ring. You cannot hope to sustain a career in trading if you're focused on buying objects with your profit. You need to focus on the market. Why? Another reason why, a more typical, more common reason, or a daily, more practical reason for people being greedy is because the way the market moves. They haven't anticipated how the market would move, and therefore leaves them. And this is my greatest. When I've been greedy, this has been the cause. It's caused me to reassess what I thought was going to happen, and therefore assume that because it's gone up very sharply, it's gone up 50 points immediately. Doesn't matter what market it is. It therefore must be something different to what I anticipated. And because I hadn't anticipated the possibility of it doing that, that makes you rethink things, and therefore it must be going higher because it's so strong, and that's when I get greedy. Whereas in fact, if I had anticipated, if I stuck to my original plan, then more times than not, by sticking to my original plan, and my original plan says that, Ed, you're going to make money by taking a 3-to-1 risk return, taking a profit, or taking a third out or half out on your levels that you agreed, that you decided were going to be right, then more times than not, I'm going to make more money in the longer term. Sometimes I'm going to miss the big one. And sometimes if I do miss the big one, I'm be tempted to do something silly, but that's where my discipline and rules come in to stop me trying to chase a market that I might be missing. Yes. So you need to identify the causes of greed. Another reason for greed is the desire, and it's a bit like buying your girlfriend the ring or present or whatever, is to make up a loss.
Yeah.
You've lost money, and therefore you need to make money. There's got, when I talked about, people like looking to buy yachts and stuff like that, there are people who trade solely for the rent, they don't make a lot necessarily, so they are forced to make money to pay the rent. Now that, on a day-by-day basis is one heck of a demand. It really puts a strain. So my hat's off to anyone who has the discipline, who does that. I do know one or two people do that. I'm not going to mention names, but
successfully.
Sorry?
Successfully?
Yeah, successfully.
But it's a very stressful
and as a result,
position.
in that fact alone, they have to be some of the best traders you'll ever meet to sustain that level of pressure in trading, and therefore recognizing the need, the way you resist pressure, resist greed, or resist stupid decisions is discipline. That's how they can pay the rent.
This kind of points to what Ed Sequoia said, right?
Yeah. Well, it does. There's a balance to this. Yeah, there's a balance to sticking to your plan and assessing what's going on and saying, well, no, there's no real change necessarily. I'm going to stick to my plan. And there are people, because they go chasing for that immediate profit, they see that they get overexcited and they don't have their rules. They'll leverage. They'll take too great a risk, and then that comes back to haunt them. They'll lose money, and then often people will then chase. I mentioned yesterday how, if I've taken a hit in a market, say on a swing position, I'm not going to enter that market for the next 24 hours to avoid that very reason. I can see moves. I see a move in the market, and I've taken a hit, and I think I'll go after it. I'll get my profit back, and then the next thing I know is, I've lost money, and that's a form of greed. That's trading. That's trading your profit and loss, not trading a market.
Yeah.
But at the same time, he makes a useful point. There's a balance to all this. There's a balance between a desire to make profit for society and the individual trader, and making sure that doesn't turn into excessive greed, because that starts to skew things.
Yeah.
You can't, as he makes the point usefully, that you need to take a big enough position to make money. A number of people have made the point that you should trade only, rather than trade lots and lots and lots of markets in small, you should trade a fewer markets in bigger amounts, so it has a big impact. I was talking to someone who may get on the show actually later this week. Yesterday, he's a good guy. As soon as I say a good guy, I'm sure some of my Twitter followers will know who I'm referring to. But he was making the point that a lot of people out there trade, they talk a good book, they trade lots of positions, but actually in Chicago, he was referring to the size they're carrying is not significant. Whereas, this guy I'm talking to from him carries significant risk. And so you need a balance. You need to make sure you're not going to risk money you can't afford to lose, but also you've got money that will make, if you get it right, will pay the rent. If that's why, how you need to trade. So if you take, you go back to William Morris. William Morris was a guy in the 1920s, wrote this book in 1921, which is, I was kind of looking into him because I started getting excited. I thought, Jesse Livermore's got a yacht and a house, and a few of these people. I love the picture of George Soros there with a cigar, looking pretty opulent.
This
and
one.
extravagant. Yeah, I love that picture. It's a lovely suit actually.
I think he has pretty expensive suits.
He probably does. But I was, so when I was looking up, I seen my intern was looking for the pictures, any flashy pictures, and you Google William Morris and found out that William C. Morris is actually the name of a town in Argentina, in Buenos Aires. So, forget George Soros's suits, forget Jesse Livermore's boat. This guy has got a village, has got a town. Well, I transpires actually it's not the same William C. Morris. I love the way people put the initial in to differentiate yourself, and then there's loads of William C. Morrises. But anyway, it's worthwhile looking at the book because it does contain a few gems. But he's talking about ego and how. Do you want to read it out because I can't read it from him?
Yeah. His confidence in himself increases until he develops a mental state known in the vernacular as big head or swelled head. He now has unbounded confidence in himself and plays the limit. A drastic slump follows, and Mr. Big Head goes on a scrap pile. Busted.
Yeah, well, that's the obvious outcome of greed. As we all know, not all necessarily, but most of us know certainly if you've traded any period of time, you'll know that pursuing that extra eighth, that extra inch is dangerous. So let's switch that into what it means for trading today. It's interesting because there's a market that went sideways. This is it's something that I've been following for quite a while. It's actually dollar Canada. The red line is dollar Canada, and something I've been looking at and looking for. We see it's following another market. Dollar Canada, obviously the red line is upside down, and it's following another market in fainter. And that on that basis, because there's a pretty good match, it's saying that if it continues to repeat the same pattern as this other market did previously, then quite clearly Dollar Canada is going to dump. You show what happened?
Boom.
So you've got the missing the dump.
No.
Okay, well, I can't see. My head's in the way of the very end. It shows that it's matched it.
Right here on the.
Yeah. And this is a good example of, I call that, in fact, after Warren Buffett, I call that the fat pitch trade. I've referred to that before about a paradigm shift in dollar Canada and how, it's going to long-term movement. In fact, we should do something on dollar Canada in its own because it's kind of an interesting currency. There's a great history written by someone who's sponsored, I think, by the National Bank of Canada. But in that, there's a 250-year chart that shows parity is a long-term equilibrium point for Canada, but occasionally it goes off on one like this. So my argument is that it's a paradigm shift. So, I'm looking for a lot more than we've 112.20, although 112.20 was a target. But have you noticed how the world and his wife is suddenly talking about dollar Canada?
Oh yeah, that's the trade de jour.
People who don't normally mention dollar Canada are suddenly not only mentioning it, they're actually saying, well, the analysts, the commentators are calling it higher and people are trying to buy it. That, is an example of an indicator using the sentiment again of how people who are long like me, I'm long from a good level, but how you can get greedy.
Yeah.
And therefore begs the question of whether now is the time to step out and say, well, let the greedy people get involved. Whereas which is what I'm effectively done. I'm looking to get back in, but I think that's a market that's it's for the greedy.
Yeah.
It's a market that's got. Well, in fact,
But
you can
how
look
do
at
you play that? That's a good question, because I want to sort of understand that more, because that's a common thing you see. We saw that with what's it called, the Indian rupee. So you have this Indian rupee story going on earlier, or in 2013, in mid 2013, and it's just going on, and it's just grinding lower, lower, lower. And out of the blue, the rest of the world, the Western world, discovers this, and it's almost exactly at that turning point. Do you try to gauge sort of when the last man, the 12th man in the team, the last man to know?
Indicators. And look, you've got to be really careful here, because there's an easy way of telling them apart. The middle of you could have said the same for dollar yen at 90 last year.
Yeah.
And you would have had your head handed to you on a plate. Obviously, that wasn't a blowout, and there are reasons, and people were talking about it. So what's the difference about dollar Canada? Well, without going into a lesson about Elliott wave and fractals, how waves are contained within waves, within any big move, there are going to be shorter-term blowouts where things get a little bit hot and heated, and they pull back, and little bubbles bursting, and the market needs to retrench and correct. And I think this is what's happening in dollar Canada. It's happened in dollar Canada. And when you get a market like the Indian rupee, that can be a significant correction lasting a long time. The difference, Ferry, is in the biggest and strongest and the most aggressive part of a sustainable trend is driven by fundamentals. It's driven by flows that aren't front page of the Wall Street Journal. They aren't Belgian dentists hearing about it and telling you or your taxi driver telling you, actually, that's not right. Taxi drivers are very good. But it's
taxi
not,
driver called top of gold for me, by the way.
Yeah, well,
almost to the day. He said it's going to go 20% yearly for the rest of eternity, because it had and that was the top.
Well, yeah, but I wouldn't use taxi drivers, because certainly not near Wall Street, because they see quite a lot. But what was my point? Yeah, there's a difference between a market which is fundamentally driven where there are flows which will take dollars out of the system, say in the case of dollar yen, or take dollars out of the system in the case of dollar Indian rupee, and markets where the Belgian dentists and the front page of the Wall Street Journal and people driven like that. There's a difference. There's a real flow, there's a real move, a fundamentally driven move, and a speculative move.
Yeah.
Take Euro Swiss when it broke down to collapse, it was clearly driven. And it's what is interesting is the ferocity of the sentiment is often very different. There's often people not sure, it's too far. It's like the stock market now, I would argue, in fact, although it might be a bit frothy. It's, people saying it's gone too far, too fast, and you get 1929 cliches and comparisons. People aren't sure. That's the type of price action you get in a real move. When in the actual top, the speculative bubble, if you like, the fifth wave in Elliott wave terms, is when everyone is just thinking you can't afford not to be long of this baby. Yeah. And so there is a clear difference. And one, if you like, that's kind of the difference between the profit is the third wave and the greed is the fifth wave. Behind a move, behind a stock is doing well, it is making profit, it looks sustainable, and eventually it does its correction, fourth wave, and then it goes into fifth and final leg, and that's when the greed comes in and people start thinking this stock's going up forever, even though the fundamentals don't support it. No. And that's when it reverses. So greed often is an indicator. When people start getting greedy in a market, you can see obvious signs of greed. There's often an indicator that the market is turning. You've seen that a little bit in the sum of the emerging markets. There aren't many markets, I don't think, they're in that position. You saw that in Bitcoin, I think. You saw quite clearly the last $400 happened so quickly.
The same with gold, though.
Yeah, and exactly in gold.
What about stocks? I don't really see that in stocks.
Well,
people are
going back
like reluctant
to
bullish.
Our bubble chart, which we talked about doing, and that is, that is the problem of greed. Is it gets in the way of rational decisions, gets in the way of a rational analysis and therefore rational trading, a sustainable rational trading plan. If you take, have you got that Euro Aussie chart I posted a couple of days ago?
Euro Aussie, yes, I do. No, the one this one?
Yeah, I can't see that at all. Is that a bad chart or bad resolution?
No, it's just a little dark. Yeah, no, it looks okay, I think, if you just put it on HD.
Yeah. Now that's an indication of a market that's getting, people could yesterday, I mean, it's easy now, but I mean, this basically was calling for a drop to new lows, and the need for the market to slow, and lo and behold, people getting a little bit greedy would have got hurt. But part of the game plan is that market will slow the next few days before I think it's going to break down to 48.20, and then again we'll get an even bigger squeeze on the upside. So that's kind of showing the different levels and different stages of greed and magnitude in terms of trading a market, and the same applies to the DAX.
Yeah.
And the Dow, people will know by now because I talked about it every day that I've been long.
Yeah.
I've started scaling out about 16,000. We started hitting. I mentioned yesterday, the S&P's gone over, a 61.8% retracement target. The Dow actually hasn't hit it yet, and the DAX has overshot that. And this is the DAX here. You can see we're now entering the bubble phase. Not the bubble phase. That's a bad choice of words, but the red circle. You can see how the market is slowing. I was talking about gaps yesterday as an indicator of sentiment, an indicator now that we've come back trying to fill the previous day's gap, but the market is slowing, and therefore it is time not to get greedy. The rally is slowing, the uptrend is slowing before it sets probably sets a range for as much as a week before eventually, in my opinion, before it eventually breaks higher. I try to talk about some of these concepts and where to take profit, because it's not just a question of identifying entries, it's also keeping to a plan. The risk, I talked about the metric, the risk return times probability gives you a sustainable payout, and there's no scope for greed in that, because that gives you a clear 3-to-1 trading plan, 3-to-1 risk return probability. I think it's a good trade. Putting it, like say 70% probability starts to give you payout ratios of 2-to-1, 2.1 and higher, which is a good trade, and therefore you can put in a good amount. And more important, because I've got the balance between not too little or too much, it gives me the scope to hold the position when I would otherwise be keen to get out because it's gone so far. It's 4%. It's good money in a short period of time. Now I'm going to run it with my plan. I've got my levels or the concepts of approximately where those levels should be or where they'll be, and I can start to scale out. I can keep the balance in my trading approach, which is essential.
Yeah. But people talk a lot about like exit is more important than entry. And going back to I love when you mention stuff that happened to you, especially I think for traders, it's the most beneficial things is probably when it goes wrong rather than when it goes right, because there can be, it's hard to maybe use when it goes wrong as right as something beneficial. When something goes wrong, you can use that to grow and become better. So when you made that 350 points.
Welcome to the shorter market. Sorry.
So I just wondered if what kind of lesson you could have used for. One thing is to start scaling down once you take profit. So to sort of locking in profit and like psychologically sort of distancing yourself from that windfall, if you will. So when you reach 100, you scale off a third of it. When you reach 200 points, you scale off another third, and then you keep the last third as the speculative bet or something like that.
It's an interesting way of putting it. I try and people will know, or should know, that I scale in and out typically. I sometimes don't. Depends on the nature of the trade. If it's kind of a short term, because I try and trade the range of time. I diversify my time as well as the markets, and therefore my risk profile. And therefore I will try to associate or time my entries and my exits with what I think are probable moves. and this is always conceptually that allows scope for greed, because if it weren't previously a sign saying, I don't know, let me think of an example. Oh, well, let's see the DAX. I'm looking for new highs for it. Yeah, I'm looking for the Big Ten. So because I think that's such a clear, lovely level for a market to get frothy and overdone. So it's going to approach 9,800, and market's going to be fighting new highs. It's going to set the range. We're talking 94, 98 range before it breaks up. And so what I would do there, I know the probability of it fading now is reasonably high, so I'll take out a third. And I will look to get closer to the high. When it gets to the high, I will take out another third. I may get back in on a shorter term trade if my risk return, where my stop is sensible. I could do that. And then ultimately I will look for the break higher. And when it breaks higher, Scott O'Neill referred to the climax. Now, it's very easy to say the golden rule is get out of everything in the climax. Well, hello dollar yen at 90. Get out of everything at 90, 103, how are you left?
Yeah.
Begs the question, what is a climax? But he's right. If your system is telling you that this is the climax, this is the end, then don't get caught up in everyone else saying that, because that's what you want to see at the top.
Yeah.
You want to see the sentiment shift. You want to see no indication or fewer indications about the fundamentals supporting the trend. You want to see it on speculation and sensationalism. And that's the opportunity to phase out of the last bit. So I'll be down to a third of my final position. I'll get out of that, and then that gives me the opportunity of selling it, of fading it.
But
and
I want to go back to one of your points, 10,000 point. That's a classic. I mean, you love Jesse Livermore, and I just pulled up a chart here from on my in-front terminal about sorry, just some pop-ups here. Of the DAX, and the way you if you look at this chart, I mean, it's clearly, I mean, you can get afraid of heights by looking at almost doubling since 2012.
You want to put a gold chart up?
Gold, yeah.
Put a gold chart up for the last 10 years.
Compare it to this.
Yeah, look at a triangle at 1,000.
Oops.
I'm not saying it's the same chart, although I might be.
Oh, there's something that happened there. Oh yeah, I have that only back to...
Famous gold triangle below 1,000, yeah?
Let's do 5 years gold.
Yeah, no, it should be just
No,
about.
let's do a little bit more. Oh, there's some, I have...
My screen
I think
is stuck.
Yeah, it's my... the data goes back to 2006, so it becomes 0. There we go. Here's gold. Gold is black.
No, you don't have it. You don't have I can't see it's on the left of the chart. Basically, I mean, DAX has been in a massive triangle, and it's broken the triangle higher, and it's pulled back.
Yeah.
And so, want to talk about triangle targets, then that's going to freak people out. So it's a bull market until proven otherwise, and it's it's pulled back again to similar levels down 9,000 area. It's approximate, it could spike below. I don't think it will necessarily, but it could spike a little bit below. But trade effectively 9,000 to 10 for a while before it continues that uptrend. So,
but that Jesse Livermore thing, 10,000 for the DAX, first time ever, all the front pages in Germany or wherever. I mean, there's a...
Oh, I see what you're saying. Yeah, sorry. Yeah.
That's
the
exactly. Most basic of all Jesse Livermore trades, round numbers. I mean,
well, not just Jesse Livermore, but John Templeton as a contrarian. There's sometimes you see inconsistencies in what some of these people say over time, because they change over time. Their trading style changes over time. So if you look at Jesse Livermore from the very beginning to the end and put up statements of his next to each other, some of them will seem a little contradictory, but essentially if you put them in context, then he's talking, Jesse, you can't better Jesse Livermore, in my humble opinion. I was very tempted. Because I do quite a bit of reading about trading and look at other people's styles, and to a lot of people, there are a lot of cliches out there, about holding on too long, about greed, and a lot of cliches about a lot of trading rules that don't apply. in quite a few cases, and I was tempted. It would be tempting to go through one or two of them. I mean, no disrespect to the guy, Dennis Gartman, who produced 21 trading rules. I could probably scratch out half of them. Well, it's bad to cite someone like that, but half of them are dangerous rules if you apply them all the time. Some people say the trend, you should only trade with the trend. It might, in fact, he might be one of them. No, if your system is a trend fading system, if your system is a range trading system, then that doesn't apply. So, Ed Matt says, or, I saw on big TV, you should do X, Y, and Z. Well, make sure the examples, the particulars, the context is the same. Because the thing about trading is there are some underlying principles that can apply at all times. There are some, within those principles, or with those principles comes a series of guidelines and rules, some of which apply all the time, but a lot of them only apply in particular cases. So be very careful about black and white, straightforward approaches and rules. But I mean, that brings it back to how are we doing for time?
We're good.
Brings it back, I think, to some of the things I look at, some of the approaches, and say even in the shorter term, I'm treating this market as consolidation.
Yeah.
And from a stock market point of view, quite clearly a consolidation within an aggressive blowout, a massive blowout. So I don't think we've seen the top. So that's my trading strategy.
Yeah.
But that means I'll be willing to reduce my position. I'll be willing to sell.
Yeah.
The same as it's like everyone has been bullish on the yen. It's a new paradigm, new vernacular is to be long yen into the year. But in fact, what is it? It looks a correction to me. And it looks
stuck
like
at 102, isn't it?
$1 yen. Yeah, but it looks like it's a trading range and people getting excited both ways. And you can trade it both ways, I think.
Yeah, I'm
That's
just
the great
pulling
thing
up the
about
chart here on my in-front terminal. I want to give them a shout out, by the way, for people that are watching. I think this is great when you look at greed and some of these other providers are maybe suffering from overreach and yeah, it's an interesting. I just think it's an interesting chart to look at.
Well, dollar yen is a massive trend, and it's very dangerous to jump on it and say that it's trend, against that. I can give you reasons why it could have topped. I don't actually think that's the case. I think this is going to be a bit of an off-the-wall one. But it means the probability of my view is it declines, but the risk return has increased. So the payout's pretty good to trade it the way I'm trading it. And because the market may move 50, 100 points suddenly in one direction, in my direction, doesn't mean I should change my trading plan. I should keep my perspective, keep my discipline, and maybe let's get a bit, there's scope to be greedy sometimes. But if you are going to be greedy, recognize it. And the same with the euro dollar. There's every market that's going sideways. I'll put my hand up. I keep looking for trend on this baby, and it's not happening. It will happen. And when it happens, everyone's going to know about it. So in some ways, maybe we shouldn't anticipate the trend. We should just trade the obvious range move. There's been, like Eurodollar coming off yesterday is a classic situation to fake out.
But to go back to the starting point, to sum it all up, is greed good? And if I'm going to sum up all the things you said, if you do it right, if you trade it correctly, maybe the last third, you scale out, maybe then greed is good. Is that a nice summary?
No. No, to sum it up, greed is necessary because greed reflects a desire for profit. And that's fine. But where greed is not good is because that desire starts to take over and starts affecting how people make decisions, and they start stepping away from a clear, proven approach.
Yeah.
So you need to be focused. You need to avoid greed because it takes you from being rational and following the plan to irrational. So I guess the point at the end of the day is greed is bad, but don't ever confuse a desire for profit with greed. If you've got your plan, you know the profit you're looking for, stick to your plan, and then there's no place for greed. I think that sums it up.
That's good. We have a little clip that might show it, that you sent me, that we started the show with.
Scrap.
where
Yeah, start with scrap. Or finish with scrap.
here is playing the opposite side of the. Or I guess it's the end of it when he's getting more comfortable.
It kind of looks like a European Union flag, that did.
No, but I like this. The end. The end is coming. He's like getting a method. He's much more relaxed.
Well, it's
He's-
collecting rather a lot of acorns for my liking.
Yeah, maybe. But you see, he's not forcing it though, is he?
No, I'll never force it. So, I think we can probably finish this on the way we started with that beautiful New York Post magazine. Good. Well, I kind of think the key word there is not greedy, and it's certainly not the rude word. The key word is fast. Just step back. Think about what you're doing. And if you start thinking about what you're doing, you're less likely to be greedy. And then if you step back and you're not so fast and you're not so greedy, you've always got time to call your parents.
Yeah. I think it was a lovely summary.
Good. Well, I need to move. Get on.
Yeah.
Busy times ahead. Good luck, and we'll speak tomorrow. Tomorrow being Friday. One thing I talked a bit about dollar Canada today, following another market. Correlations form an important part of the market. A lot of people follow. There's a perception that most people trade correlations, and that's how they trade, because if one market is moving one direction, it tends to mean another market should be moving in that direction and isn't moving as fast, and so they get on the back of it. You can argue that's almost self-fulfilling because you'll move the first market and stuff like that. We won't get into that. But I was hoping tomorrow just to get on someone who's really good at correlations, Blake Morrow from Wise Trade. Those people on Twitter, Pipsar, he does his own share every day, but he's going to come on for 10-15 minutes so we can find his take on Friday. What might be a quiet Friday because it's only industrial production, I think, tomorrow. But Blake's got a good read of a market, so he's a guy. It's good to find out someone walking into the American market what their first take is, looking at a few things that might be out of kilter, a few things that aren't correlating, and to pick up some hints. So
Brilliant. I look forward to that. So hopefully that's going to go well. Technically, it's our first ever second guest, so we can make it work.
yeah, we can. Okay, sorry, good one.
Thank you so much, and thanks so much for the great show today. And this is one for the books. It's all about greed, and don't be greedy. Thanks so much, Ed, and talk to you tomorrow.
Yeah.
Cheers.
Cheers.
Bye.